Top stories after yesterday's wild ride on Wall Street. Europe's bourses take volatility in their stride. They've opened mixed, with tech stocks trading up for a change. A clash over how best to integrate the investment banking operations of Germany's Deutsche and Dresdner banks threatens Europe's biggest banking merger. And another pan-European bourse merger could be on the cards. The Frankfurt and London stock exchanges have apparently held serious merger talks. Those stories and more coming up here on Market Watch. Hello, good morning everyone. Welcome to CNBC's Market Watch. Just gone 10 o'clock Central European Time. I'm Axel Threlfall. Coming up on today's program, Swiss financial group Allied Zurich has posted strong full-year results. We'll get some insight into those numbers with Group Chairman Rolf Huppi. We'll bring you the latest data from the UK industrial and manufacturing production due out in under 30 minutes from now. And Norbert Walter, Deutsche Bank's chief economist, joins us. He'll be looking at the effects of the internet on the economy and on society.
Good morning, everyone. Welcome to Market Watch, the show with no balloons, no champagne and no cake, and also no data from the FTSE. We're still having data problems. We'll bring you that as soon as they decide to produce it.
All right, Guy, many thanks for that. Quick check first up at the wild swings on the NASDAQ and the Dow. There you can see that graph. That drop of almost 600 points midday did pull over Man is in favour of that deal. But Mr. Esser is pushing to spin off ATEX as an independent unit, with the backing of a group of blue-chip investors, including electronics group Siemens and insurer Allianz. Tyre maker Continental is also reported to be interested in linking up with ATEX. OK, time for our first break. 10 minutes past. Guy Johnson's going to run us through all the corporates when we come back. Also, we'll be chatting with the CEO of Allied Zurich. They came out with better-than-expected numbers this morning. There's the email address, marketwatch@cnbceurope.com. We'll be back in a couple of minutes.
Welcome back to Market Watch, everyone. If I can spit that out, I'm Guy Johnson. It's about 12 minutes past the hour. Well, it's not been that bad a day so far for the tech stocks, despite that real roller coaster ride we saw on the NASDAQ yesterday. If we can check in and see how the Dow Jones 50 are currently faring, we can see media stocks and technology stocks not doing that badly. Vivendi up 1.89% and Siemens up 1.08%. The percentage movements aren't that great, but in terms of sentiment, this is quite a significant move. Alcatel, as you can see, also in positive territory. The European investors do seem to be holding their nerve, it has to be said. We're going to have to wait and see just how mature they're going to be about this, to this whole gyrations and the volatility we are currently seeing in the market. Obviously, tech stock phenomenon is still relatively in its infancy still here in Europe compared with in the US. As you can see, really, in terms of the sector gainers, technology, well, it's managing to hold its ground, it has to be said. Not up a great deal, but still significantly, and more importantly, not down. Non-cyclicals are, however, down. As you can see, the markets overall are in the red today. Most of the European markets are in negative territory. We don't know where the FTSE is because we haven't got any data on that. Non-cyclical goods down 0.7%. These are the least biggest losers. Let's have a take a look at the biggest losers. Energy down 1.72%. Insurance down 1.3%. We're going to be speaking to Allied Zurich very shortly. Their stock last 6 months, recovering in the last month, really. Today, though, the insurance sector is now moving down. Chemicals down 1.14%. Financial services and basic resources also down. Let's check in and see how the TMTs are doing. The technologies losers, these are they. Equant down 2.4%. Telecom Italia Mobile down 2.34%. Down at the bottom there, you can see Deutsche Telekom down 1.21%. Tech stock losers, and there are some there, as you can see. There are some fairly big names in this list. Thomson CSF, Barn, Capgemini, Atos, and Aerospatiale Matra, all in negative territory today, though. Broadly in line with the markets, though, it has to be said. Don't read too much into this as of yet. We're still not getting a clear direction in terms of where things are going to go. In terms of the media stock losers, there are some pretty big numbers there. The UPC down 8.62%, Publicis, Canal Plus, L'Espresso, and Mediaset all moving down into negative territory. Let's just take a quick look at the Dow Jones 50 losers. Total Fina, AXA, ING, as we were talking about the energy stocks, the financial stocks, moving down into negative territory today. Anyway, on that note, let's hand back to the studio. I know we're going to get a little bit more in a minute on Allied Zurich.
All right, Guy, thanks a lot. Right then, dollar really coming under a little bit of pressure yesterday, of course. The NASDAQ. Well, analysts say first quarter earnings from Yahoo will be under the spotlight like never before today. The world's most visited website is seen by many as a key indicator for the whole tech sector. CNBC's Andrew Glassman has this report.
The tech sector is in need of some positive results. Will the internet's most used website deliver strong first quarter numbers? The consensus among analysts is yes. First Call reports earnings are expected to be 9 cents a share, a 200% increase from the same quarter a year ago. Beyond that, there'll be a focus on the number of page views and unique visitors to the site. Will the number of hits, now over 505 million a day, continue to increase by 20 to 30%, as some analysts project? In the current climate, the Yahoo results could be seen as a key indicator for the rest of the sector. Yahoo has been hurt in the recent sell-off. The stock is trading down roughly 30% since the start of the year. The stock was trading down $32 a share before finishing up 7.25. The analyst community remains bullish on Yahoo, especially at these depressed prices. In their earnings preview report, Bank of America Securities writes they maintain their buy rating on Yahoo, calling the stock a core new media holding, though they feel the internet sector is likely to remain difficult in the near term. Andrew Glassman, CNBC Business News, Los Angeles.
Well, let's take a break. The international news with Leon Hawthorne will be up right after these messages.